Yo, what's going on YouTube? Welcome back to another video. Today I have my May 22nd trade recap. I'm coming at you with back-to-back days. Now today we are down. Obviously you guys said yesterday we were up, but we are down today. All right, and I'm gonna go through. I took 2 trades today, both were L's. I learned a lot though. All right, so this is what I kind of have the breakdown of the first trade that I took, kind of the profits I was looking for, everything, etc. All right, so coming into market open, which I will mark out again for you guys, is this candle right here. All right, this is market open. All right, we came down. All right, we kind of bounced off of this 15-minute fair value gap right here, and price shot up and took out London high. All right, so with that said, my bias was short. And the reason for that was there's no nearby buy-side liquidity for us to really take out. Now, I kind of broke down my strat on the right side here just so I can kind of explain my reasoning for why I took the trade, not only for myself, but also for you guys. Let me get this out of the way. All right, so what I look for, all right, so price is always drawn to a strong level of liquidity, right? That could be an imbalance, it could be a previous day high, it could be a data candle, it could be anything, and price is always going to be typically drawn towards the strongest nearby liquidity. So with that being said, coming into market, if we look at the grand scheme of things, we're super bearish, right? We had that crazy sell-off yesterday from bonds, and we're looking pretty bearish. All right, but with that said, enough of these ads. With that said, I was looking bearish after taking out buy-side liquidity. I wanted to see how price reacted. If we ended up sweeping and held below, I would look for shorts, which is what ended up happening. Right, so as you guys can see, we swept London high right here, which is this red line here, and I have an indicator that I use for my Asia and London session highs and lows. And we swept this external high right here at 21,328. Now, we had a couple of fair value gaps set up, right? So with that said, I'm going to get these out of the way just so you guys, just because I'm going to change the time frame and it's going to make the sizes change. So we swept both, as you guys know. All right, now, I ended up taking the entry off of the 15-minute. All right, and I was in a live trade with my mentor and everyone that joined, and I ended up thinking this was the safer option, and I'm going to show you guys why. So if we go down to the 5-minute, which is what they all took their entry off of. All right, let me get this all out of the way, just because you guys already saw what I was looking at. Let me get the 15-minute for value gap out of the way. All right, this is what they took their entry off of, and the reasoning they did that. And the reason that I didn't take this was because we had this 5-minute fair value gap below. My logic was, if we entered here, right, if we entered shorts right here, which is what they ended up doing, if we entered shorts here and we targeted all of this, right, we have this internal low from our from New York open, we have our London low and an external low from previous days, that we would bounce off of this 5-minute potentially, and it'd be a risky trade regardless. Now, if we ended up selling through and we ended up inversing both fair value gaps, I would enter, right? So with that said, I ended up waiting for this one, but I let greed get the best of me. All right, I let greed get the best of me, and I ended up entering off of that 15-minute that I had the setup on. All right, I ended up entering off of this 15-minute fair value gap, not really caring about the 5-minute fair value gap right below. Now, granted, the higher the time frame, the more strong the level is, or the imbalance is. So realistically, if we inverse this 15-minute, we should be fine, right? We should be fine. But that ended up not happening. If we go back down to the 5-minute and we get rid of this 15-minute, this 5-minute right here is what we seem to bounce off of. But not only that, there's one thing that I forgot to include in my strategy. All right, so just to break down the strategy, I typically trade an inverse/continuation model depending on what happens. But with the inverse model, we are looking to first sweep a draw on liquidity. A draw on liquidity is typically a high and low from a previous session, data candle, imbalance, etc. All right, so did we sweep London high? Yes. Did we sweep this external high? Yes. And what a sweep is price shooting through, right? It doesn't have to close. As long as the wick goes through it, price hit that draw on liquidity. But the price has to hold below. If the price, just like the London, we didn't sweep London's liquidity, right? We shot through and we continued pushing up. That's not a sweep. A sweep, it has to go through, right? It has to wick, and we'll call it touch the liquidity, and then it has to hold below for it to be considered a swept draw on liquidity. All right, so we swept this internal high, which also led to me wanting to wait for this 5 minute down here so we could sweep both the external high and the London high, which would kind of be a double whammy confluence hit right there. All right, now number 2 is we need to form a MSS, or a market structure shift. A market structure shift is exactly what it sounds like. It is a structure shift in the market. What that means is if we're bullish, if we're pushing up, a market structure shift would be us changing to bearish, right? So with this inverse model that I do, I typically want to catch the top of the MSS. All right, now I decided to play safe today, and it kind of costed me, but I'm going to get into that in a little bit as well. So with this first trade, what I ended up doing was waiting for the 15-minute, right? Let me go back to that. I waited for the 15-minute, and I took the trade, and I instantly got stopped out. Why? Most likely because 1, of this 5-minute fair value gap down here, and 2, if I take a trend line and I go from our low here and I put it to this low here, I don't know why this thing is so thick. God damn. Right? We have not broken structure to the downside, meaning we are still in an uptrend. All right? Now, which makes any trade that you take in this range right here, risky as hell. Right? You're essentially gambling, and I didn't realize this. Right? So I should have looked for a continuation, which is what ended up happening. Right? If I had entered off of any of these bounces, right, any of them, and I had a 30-point stop loss, guess what? I do not get stopped out once, and I'm still in this trade. Okay, maybe I get ticked, but you get my point, right? We did not break structure. Look, it bounced off. Price is not breaking this. We are still in a uptrend. So we actually consolidate here. Right, this is just a big consolidation space. So technically we're not in an uptrend, but we're not in a downtrend, which is what I was looking for. So I think a good thing to look at here, a good learning point, right, is essentially, right, so I'm going to add something. We want to sweep. That's the first thing you want to look for, right? Then, instead of looking for the second one, actually, market structure shift, we'll put market structure shift and break of structure. That's one thing that I'm going to add, all right? I'm going to add a break of structure. Now, if we, let me get into some space right here. If we were making higher highs and higher lows, right, we're in an uptrend, okay? That's an uptrend. Higher highs, higher lows. We have this low and this low. These are our lows, right? If we do this, if we do this, right, let's say we have a candlestick. Let me change my settings real quick. Let's say that we have a candlestick here, a candlestick here, and a candlestick here. My idiot self, right, thought that if we ended up selling and we took out this one, right, let's say all these are green right here. Let's say that all these are green. I'm going to make this really simple for you guys. Let's say that all these are green and this one's red. This one candle's red. Is this a break of structure? No, because our previous low is right here. Okay? So for us to have a break of structure, we would have to close beneath this previous low. All right, this is a break of structure. All right, this would be a break to the downside. Let's say that we had a fair value gap. Let me change my settings back. Let's say that we had a fair value gap right here. All right, if we ended up, let me just use a brush. If we ended up closing below this fair value gap, then I would look to take shorts here. Right, not up here. Right, not up here, not if we inverse this one, but if we inverse this one after the break of structure. Right? Because that kind of confirms that we are looking to go downwards. And I made that mistake today, right? I made that mistake and I paid the price. Now, the second trade I took was the 5-minute inverse. So I'm gonna keep this very short just because the second trade was just, I thought I had more confluences going into the second trade. And I was targeting the exact same level. So the first trade, first trade, I sized 7 micros, or we'll put 7 MNQ, and I lost $428. The second trade, I sized 5 strictly because I did the math, and this first trim, I would have trimmed 3 of my 5, and I would have made back my loss. But I ended up losing another $300. So I would say that my loss wasn't due to me not following my rules. It wasn't due to me. I mean, the first trade, yes, I was greedy. The second trade, amazing entry, amazing confluences met, etc. But if we go back to this trend line, we did not have a break of structure, right? So here, I'll put this is a uptrend, right? There is no break of structure here. All right, this is the previous low. This is the lowest low. I mean, even if we went to here, right, we still have not broken the trend, right, until here. But guess what? There's no fair value gap for us to inverse. Volume's low because it's end of lunchtime. You're not going to get a trade most likely. So you might as well play the continuation, which is what ended up happening. Even if we go on the 15-minute, right? This is the previous low. We ended up breaking the structure. We can't take an entry until we get down here on the 15-minute. And then if we upscale to the 5-minute, right? If we upscale to the 5-minute, then guess what? We have a break of structure right here, right? This is where we closed. We have no fair value gap, nothing to take an entry. We don't even have a continuation to the downside that we could take. We have no entry. And once again, volume's low. So we're going to notes from today's trade. Look for break of structure when trading inverse model, right? Because we want to make sure that when we are creating that market structure shift, let me make this bigger for you guys. When we are creating that market structure shift, that we are changing the trend. And if we don't break our structure, we haven't changed the trend yet. We're still in an uptrend. If we're talking about today's trade, we were still in an uptrend, right? So we need to make sure that we need to not let greed take over. If you have a plan, stick to it, right? That 15-minute inverse I took, that was greed. That was all greed, right? And lastly, the last note of the day, make sure you look at the bigger picture. This kind of falls in tune with the first note, right? We want to make sure that we are that we're looking for a break of structure, and that's a part of the bigger picture. But if we also, let me get rid of all these. If we also go to the 15-minute, right? There's no break of structure here. Yes, we swept. But where is there a setup here? Where is your entry? Oh, I'm on a 30-minute. Oop. If we look at the 15-minute, we have this technical entry, right? But we don't break structure until we break below my first profit target. How does that make any sense? My first profit target is where we technically confirm the downtrend. That doesn't make any sense, right? So it's like you think that you have a good trade. You think you're meeting your rules. But then when you expand it, right, and you simplify it, then you realize why it went wrong. I couldn't fathom how we didn't dump here. We, like this right here, this alone looks like a great market structure shift. No, because a market structure shift is changing the trend. We haven't changed the trend yet. This is technically just a pullback. We just pull back in the market. We're not going down. There's nothing that even confirms that. Now, there is an entry here. We could have taken an inverse here. And why? Because we came down, we swept this internal low, we didn't break structure, and we took the inverse to go up, right? We could have set a 30-point stop loss and just targeted the New York high, and it would have hit. And if you go on the 5-minute, it's still there, and guess what? It would have hit 85 points. I wish that my brain worked when I traded live, and that's what I'm working on, and I've gotten really good at it. But today was just one of those days, and guess what? You're not always going to win. That's the big thing that you have to realize. You're not always going to win. And if you don't win, guess what? There's always tomorrow. But guess what? Tomorrow's also not promised. So when you're trading, make sure that you take full advantage of it. That's all that I'm going to get through today. We're down today, but that's all good because it's what? We're going to get it back tomorrow. Now, granted, we do have an orange folder. We have new home sales coming out. Today, it was built into the price, so I'm curious what tomorrow will look like. But yeah, if you guys are new to the channel and you guys do enjoy the content that I post out, make sure you guys drop a like down below. Comment other videos that you guys want to see. I honestly enjoy making these, not only because I'm getting educational content out for you guys, but also I'm realizing what I'm doing wrong, and I think that's where I strive the most, is when I realize what I'm doing wrong and that I don't make that mistake again. But hopefully you guys can learn from my losses, and hopefully you guys don't make the same mistakes, and hopefully you guys trade well tomorrow. But hopefully you guys did enjoy the video, like I said, and I'll catch you all in the next trade recap or educational content. Peace.